What's up, everybody? Joe Brown here. This is the Heresy Financial Show, and right now there is a generational buying opportunity. An opportunity to make investments, allocate your portfolio, these types of opportunities that rarely come more than once in a lifetime. Right now we are seeing things unfold where absolutely fantastic companies, great companies, profitable companies, producing cash flow, returning capital to shareholders. We are seeing things like this pop up and happen. And the best part is these companies are on a fire sale right now. They are at a steep discount, and it is only a matter of time before the market recognizes it, before big money starts to flood in through just a couple of these companies. Like I said, it is a generational wealth creation opportunity here. And I'm going to share with you, number one, the reason why what we're seeing right now is a buying opportunity. Even though everybody thinks it's a selling time, it's a time to sell and run away, it's actually a buying opportunity. And number two, I'll share with you a couple ideas of some companies that fit this description more than anything else. Ready? Let's dive in. Today's video is sponsored by Gold Mining Inc. For more information, see the links in the description below. All right, Ray Dalio has an absolutely fantastic quote about investing. He says, "In order to make money investing, you must bet against the consensus and be right." And that's not just wisdom from Ray Dalio. That echoes the wisdom of pretty much every single great and legendary investor throughout history. Not only does it reflect the wisdom that they say, it reflects the wisdom that they do and that they live by, the actions that they take. Take, for example, a gentleman named Sir John Templeton. You've probably heard of him. Sir John Templeton made a name for himself when Hitler invaded Poland, because at this time, the entire world was very scared. This was a time of fear. This was a time when everybody was selling their investments, but not Sir John Templeton. Instead of selling, what he decided to do was he went and he bought companies that were on the New York Stock Exchange that had fallen below $1 per share, turning them temporarily into penny stocks. But the best part is he didn't just buy them with his own money. He went and he borrowed cash, borrowed $10,000, which obviously at the time was a lot more money than that $10,000 is worth today from inflation. And he borrowed money and bought these companies, making for himself a fortune because he bought when there was blood in the streets. He bought when everybody was running away. He was the only person going in the building when everybody was running out. But it doesn't just stop there. He was also the first American to invest in Japan after Hiroshima and Nagasaki. If you've never heard of Sir John Templeton, you've probably heard of his company, Franklin Templeton, one of the largest money managers out there, massive mutual fund company, been in operation for over 7 decades, all on the backs of what he started, which was investing in a way that is contrarian, investing in a way where you are buying the things that everybody is scared of, not for good reason, just because of the fear. There's no difference with those companies. Nothing changed with the companies. The fundamentals are still the same. So everybody's rushing out of the building because of panic. I'm going to be the one going in. At times like these, it presents generational wealth creation opportunities. This is the approach that Warren Buffett has always taken with his investing, buying Geico when they are on the brink of bankruptcy. This is also the approach of Warren Buffett's mentor, Benjamin Graham. And in Benjamin Graham's book, The Intelligent Investor, which is looked at as like the Bible of fundamental investing, he talks about buying companies that Warren Buffett describes as discarded cigarettes with a little bit left. It's like people are throwing it away, but there's still something there. There's value there that people just don't want to take the time to research or to look at. You're buying companies at an extreme value because for one reason or another, everybody else is throwing them away. But you are going against the crowd. You're a contrarian. You can see the value there. And it's only a matter of time before the market realizes you are right and rewards you handsomely for it. Just as a rising tide lifts all boats, a tide that is going out will cause those same boats to go down. Nothing changed with the boats. So over the past 2.5 years, and really 10 years, we have seen asset prices, especially the stock market, go up and up and up and up because we've had easy and easier monetary conditions. The Federal Reserve has been printing money, forcing cash into the economy that has bid up the prices of assets. Guess what that does to the price of all assets? Generally pushes them higher. Doesn't matter the company. What matters is money is coming in, pushing everything up. And the opposite is true as well. During tightening financial conditions, everything goes down. Look around you. Look at the asset prices. Look at stocks. Everything is falling simply because monetary conditions are getting tighter and tighter. Now, while that is painful for some, it causes a lot of fear in the markets. If we take a look at the Fear and Greed Index from CNN, we can see we are at an extreme level of fear in the markets, and historically, there's not been this much fear in a very, very long time. However, if you can clear your mind, remove the emotion, and look at things objectively, you will realize that that means there are great companies that are on sale. It means there are companies that are profitable, that are producing cash flow, that are returning capital to shareholders, companies that are absolutely fantastic companies that for reasons that have nothing to do with the performance of the actual business, their share price has been plummeting. And I think you know the industry that I'm referring to, which is gold and silver miners. If we take a look at GDX, we can see that it has taken a 25% hit just within the last month. Again, all of these companies, nothing fundamental has changed about them. They were great companies before their stock prices fell to the point that the index went down by a quarter. Now, they're still great companies at insane valuations. And I'm going to show you a company now called Gold Mining Inc. that I believe is one of the best examples of this. Number one, I'm a shareholder. I don't put companies in front of you that I don't believe in. I own this company. I've owned it for a while. And since they've sold off recently, I've bought more. So why is that? Let's take a look. GLDG. The first thing we need to look at is the market capitalization. This company has a total market cap of $164 million. If you're not aware, market cap is the number of shares times the price per share. That gives you the total valuation that the market is ascribing to a specific company, because you have all the potential buyers, all the potential sellers, and all the actual buyers and sellers who have pushed the price to an equilibrium point for the time being. Currently with GLDG, that is at $1.08 per share. Given the number of shares outstanding, that gives it a total value of $164 million. So why in the world would the market be valuing this company at $164 million? And is that fair? Is that above what it should be? Or is that below what it should be? Well, let's take a look what is going on with this business. Obviously, it is a gold mining company, and so they are going to have some properties, some assets, and some proven resources. Before we look at those, let's see what else this company has. The first thing that we need to look at is that this company owns 20 million shares of GROY. So what is GROY? GROY is the fastest growing gold royalty company, Gold Royalty Corporation, currently valued at $3.15 a share. And this is another example of a company that has just gotten clobbered from the recent sell-off. Again, the fastest growing gold royalty company here. The price is getting clobbered. Royalty companies, I've done videos on this before, how royalty companies work. They have guaranteed sources of income from all the producers that they own these royalties on. So all of the companies that they own royalties on are just paying them out of revenue, not out of profits. So all these companies are paying GROY royalties, checks, giving them cash whenever they pull gold out of the ground and sell it off their revenue. So they're inflation protected because it doesn't matter if the costs of these companies go up. They're paying out of their revenue to royalty companies. They're not paying out of profits. So it doesn't matter if their profit margin gets squeezed. Royalty companies still get the same. But the market doesn't care. The market is very irrational. So GROY has sold off like crazy, even though this is the fastest growing gold royalty company in the world. So GDLG, Gold Mining Company, owns 20 million shares of this company. Well, the total company is worth 434 million. And so when you have 20 million shares, that is worth just about $60 million. So GLDG, Gold Mining Inc., owns about $60 million worth of this royalty company. So you look at their total market cap on GLDG and you see their total market cap is $164 million. You have to subtract just about $60 million out of that because that's all value that belongs to GROY. It has nothing to do with the business of Gold Mining Inc. So you have to take that out of the market cap to see what are we valuing all the other assets, all the real assets, the business part of Gold Mining Inc. You also have to subtract their cash, about $10 million. That leaves you with about $90 million that the market says this company is worth. GLDG, they're saying the business of GLDG is worth about $90 million. Now, you're still wondering, well, is that a lot or a little? Is that fair? Is that too high? Is that too low? Is that a discount? Is this a good buying opportunity? Before we take a look at that, let's take a little bit of a detour and see what's happening overall in the gold mining industry right now. Number one, we are going to take a look at this chart that shows global reserves and resources are in decline. This goes from 2007 through 2020. We can see that the total gold reserves of all these companies here that are included down below in this description on this chart, we can see that they peaked in about 2012. That is because there was a bubble, right? There was a ton of money that flooded into the gold mining industry, went everywhere. A bunch of investors lost a ton of money, but there were some new exploration. There were some new projects that were started. There were new deposits and resources that were found. And so that did contribute to a growth in reserves. But because of the bubble and because of all of the money that was lost by investors, investment into this space basically stopped. A bunch of companies went out of business and investors just said, we're not investing money in this space anymore. That has forced every remaining company that has survived to get very strict with the way it does business, to get very conservative with the way that it spends money, and to start making money instead of relying on investors. But the other thing that has happened as a result is that reserves have been going down. We can see by this chart, every single year, the number of total reserves starts to decline. Tavi Costa tweeted this tweet out recently that commodity producers have generated 3 times more annual free cash flow than its prior peak. We can see this absolutely astronomical amount of free cash flow that commodity producers, including gold and silver, have started producing. This is a long-term chart, goes back to 1995. Absolutely astronomical amount of money that is being made right now by these companies, especially on the back of this dip where they were really scrambling and it was at the bottom of this super cycle in commodities, absolutely scrambling. That forced companies to do business well, to get creative, to lock down their finances, and that has resulted in an explosion in free cash flow. Now, if we take a look at all of the assets, all of the resources, this diverse portfolio of projects all throughout North America and South America that gold mining has, we come to a total of 32 million ounces of gold equivalent resources. That is measured and indicated plus inferred. And if we do some very quick math, the market is valuing the number of proven ounces that gold mining owns at under $3 per ounce. That's right. All the gold in the ground is being valued, that this company owns, at under $3 per ounce. The spot price of gold is about $1,840 right now, $1,840. Now, that doesn't mean that any company is going to get priced by the market as gold in the ground at spot. That's not going to happen. But the market regularly values companies at $40 per ounce, $50 per ounce in the ground. That means Gold Mining Inc. is currently being valued by the market at a 90% discount or more, given its proven resources, how much it has in the ground, and the current price of gold. Now, you're probably thinking right about now, which I would be thinking this 100%, obviously it's too good to be true. But we just looked at how the market is throwing these companies away right now because of cyclicality, because of monetary tightening, and because of a large period of time where these types of companies lost a bunch of money for investors. These are not cigarette butt companies. These are not companies with a little bit of value that the market is valuing as not having any value. These are companies that are monstrous value. This is like an entire box of cigarettes that's been thrown away, which cigarettes are probably a really bad example here. This is literally gold being valued like trash. But don't take my word for it, because obviously I'm just some guy on the internet. If this is really a good company, who are the names of the people that are involved? Have you ever heard of BlackRock? That's right, BlackRock, who did everything from pioneering leveraged buyouts to investing in creating companies like Invitation Homes that bought up tens of thousands of homes across America before one of the greatest real estate bull markets in history. Rick Rule, who is the right-hand man of Eric Sprott, and Eric Sprott is arguably the biggest and best name in the entire gold mining industry. Doug Casey, not only that, but this company is in the index that GDXJ invests in. And then finally, we have Amir Adnani as the chairman. You can see from this chart here that the total cost of acquisitions that Amir Adnani was making totaled about $81 million when he's buying all these resources with a total market cap value of $850 million over the years. Literally buying these assets at pennies on the dollar, creating a massive amount of value. And as if that wasn't enough, we've got a very similar story happening with energy right now, and especially uranium. Underinvestment, resources being depleted, the ones who have the ability to produce massive profit potential coming up in the future with these energy crises happening all over the world. And guess what? This company, Gold Mining Inc., if you discount everything else, it also has a uranium property located in western Athabasca Basin, which is called the Saudi Arabia of uranium. This property and the resource of uranium here is not even included. It is priced basically at zero. The market isn't even putting any value on this property, yet they've got $10 million in exploration surrounding very high-grade deposits. Basically, on top of all of the value that gold mining has, the deep discount value that it has, you also get a call option on uranium for free. And Amir Adnani knows what he's doing with uranium. Go look up some of his past recent projects and companies with uranium. He knows what he's doing. At the end of the day, we are entering into a cycle, a super cycle for commodities. They are the biggest money makers on earth right now, and the market is pricing them as if they're worthless. Not only that, but we are turning a corner right now where the market is starting to realize we need to start investing in things that have real world use value, real assets, the things that are in short supply where demand will only keep on growing. We are also seeing monetary conditions create more and more problems around the world that will force Federal Reserve and other central banks to switch from being tight to switch back to being easy. During high inflationary long-term cycles like this, like the 40s, gold should perform absolutely fantastic. And if you think that it's a good idea to have some of your money, some of your savings in real money, in gold, then it would also stand to reason that some of your investment portfolio should be allocated to steep discount, high value, very strong fundamental companies like Gold Mining Inc. It's not an investment recommendation. This is not trade advice. Do your own research. And I can pretty much guarantee that the more you do research on this company and others like it right now, you will agree that right now we are sitting at a time period that people will look back on and think, man, I really missed the boat. I wish I would have invested in gold miners, in silver miners, even in broad commodities. That was the bottom. That was the best time in history because we are turning this corner right now where we are about to see a massive breakout. This is quite possibly one of the largest wealth generation opportunities that most of us will ever live through. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.